Hello, hello, good morning everybody. I'm currently traveling at the moment and tuning in with my laptop, so if you could please let me know that you can hear me, that would be great. Hi Dan, hi Miles. How's the sound today? I'm not sure what the latency or the delay is. You guys can hear me? Okay, thank you so much, Johnny. So market's opening up. Quick short on the YM. Maybe it's if you can grab it if it comes back up. Nope, too late. That's too bad. That would have been a fast winner. But definitely fast is the word. Literally 4 seconds. And that's too fast. So we'll wait for another one. Crude oil. Crude oil started with the short trade here. And even adjusting below the blue line, it would have triggered in, and then it flipped over to long. So it got short, then got long on an adjustment at 87.58. I need to make this bigger. 87.58. Adjusted up to 61. So it did get long at 61. So it's targeting a small 71 target 1, 10 tick target 1 after the adjustment. So hopefully it'll go further and get to target 2. I don't know if anyone's in this trade, but that's the mini session for crude oil with Spotlight. Okay, the YM is flat, so we'll keep looking for the next setup. I've got a micro Russell showing here. And you can see that one also went very quickly for a quick winner. I'm going to turn this automation off. And we'll look at unleaded gas in a moment. I just don't want to miss our YM if we get a YM trade. And I believe a lot of background noise. Let's see. Sumi, could you close that door? Yes, I am in beautiful Buenos Aires, South America, Argentina, and there's some street noise. I'm trying to close it down and see if that helps. Tell me if that's any better. Maybe that's a little quieter, hopefully. Looks like soybeans got short on the purple trade here. Adjusting on the green trade didn't go through. You would have stayed short, and it just hit its target 1. So soybeans again with a really fast one and done winner. You could tell that that plan just keeps working every time we check it out at the beginning of our session. And the YM did get long again through all that, and that also happened too fast. 3 seconds just is too fast. So again, we're going to have to wait. 2 winning trades, but too fast to execute. The only thing I'll say is that I believe I left a couple. Yeah. This usually we're looking at these trades here on the YM, if I remember correctly. Depending on what you're trading, obviously. With the SMS, if you're in diamond level, you could have traded these dots off the 200 moving average. I didn't have them on, but this was definitely a trade that could have been had for a nice winner. We'll look for the next one. You could see that Catapult's doing really well. Winner after winner after winner, pretty much, since the market opened with M2K, the micro. The markets are really happening here. Okay, good. I'm glad that helped. It could have been that I had the wrong button pushed on my mic also. I also closed the outside door. It's just so pretty out my balcony. I like to have the outside noise. It's nice ambiance. All right, so welcome everybody. Hope you guys had a nice weekend. Unleaded gas. Unleaded gas. I had this short here at 9 a.m. Went way too fast. So then there was this short trade here. I don't know if anyone caught that. That one might have been a real fast one also. You could tell me. But anyway, that would have been a losing trade, and then a nice winner to follow here. Definitely have a few bars to catch that. So hopefully finished with a 2-trade sequence if you happen to catch that short blue trade there. So these spotlight trade plans that we've been watching every day for so long continue to perform, continue to work. That's why it's kind of hard to bounce them off the room in lieu of something else. Now, I will say that crude oil has definitely lost 2 in a row here. So crude oil, while it continues to push to new high prices at $87 a barrel, unfortunately, a winning short trade was filtered out due to the crossover rule. One more bar, and we would have been able to grab it. But so 2 losses in a row on the 9 o'clock mini session on crude oil today with Spotlight. And then YM, I think we're still waiting for a trade that isn't too fast. Now, if you are using these additional setups, and you really should be finished because of the short winner that happened here. But I know it's optional. Like, this trade plan was created before we added the additional setup from the diamond level. It was kind of an optional setup. This setup is the wrong color, but this is this is a blue trade, and this is actually a valid trade long at 34,486. But much like this, it's an additional setup that's optional. And I got the wrong color on there, but I could tell by where the dots are that that's a dark blue trade. It's just red. Sounds like a fan. That's probably just my laptop. All right, I'm going to push another button on my mic, and I want you to tell me if that improves the sound. Let's see. Okay, so now, let me see. I might have to take a closer look. It's really hard to see because it's tiny print. My eyes are tired. But does that now sound better? John Ford, that's right. I'm Backpacktrader. I flew south for the winter. So, did that change the sound of the mic, by the way? Maybe it's about the same. Okay. Yeah, it's always weird when I'm on a portable trading system. I think this is the right setting. This is more directional towards my voice, so hopefully that helps. But if you hear a fan, it's just probably the humming of my laptop. There's a short trade now on the Dow E-mini, and that's another blue trade. No, it's a pink trade. These colors are weird. So I don't know. I mean, that's short. If you missed it and you want to get short, adjust it below the spike. Okay, so the entry was at 429. Get it at 427 if you're going to take this trade. crosses that line there. Oops, that's 426. We can get the idea. There we go. And is anybody trading the custom Renko with Catapult Russell? Because this thing has been on fire all morning. Well, since we started. There's a losing trade right there. But it's mostly winner after winner. It's just been crazy good. It's another one. Of course, it also depends on what you're targeting. The target 2 is a good scalp target. Target 3 and target 4 obviously gets hit a lot. I guess you could look at the size of the trade, but you could see that even target 2 is better than a 1-to-1 risk-reward ratio, and it doesn't bother me if you want to scalp out. Since it's a micro, you can come off at targets 2, 3, and 4. I don't know if I would do target 1. Target 1, you're going to be not that profitable off of target 1, I think, because, well, it depends. It's a small target. I'd go with 2, 3, 4. You can go with the fixed target, I suppose. There are other trade plans that have bigger, like maximum excursion fixed targets. This is more of a basic trade plan. Blue and pink picket fences at the bottom of the screen. Yeah, so, well, it depends. That's Spotlight Master Suite that you're asking about. So you're talking about here on like the YM, for example. By the way, missing that entry and adjusting would have been a good thing because it was a loser and there's another short. But seems like the YM's become a little problematic after some fast motion here, but if anyone's interested, there's one more short. But you can see the up, down, which is problematic. So this is the oversold, overbought indicator for Spotlight, Johnny. This indicator is part of the strategy. Basically, when you get the pink bars over the yellow line, the market is overbought. And then you get the pink short setup, reversal trade. And when the blue lines go over the zero line, the markets are oversold. And then you get the blue trade. Then you also have the green line here, which is a trend strength indicator. And when that one gets over the yellow line, then whichever trend caused it to go up, because that's going to go up depending on the strength of trend. Whether the trend is up and down doesn't matter. So if it goes up over the zero line, then you're going to look to short trade in the opposite direction of the trend that pushed it up. And if it gets below minus 20, that's called sub-zero. And that's another way to use Spotlight. We have a whole indicator set that you can take advantage of sub-zero setups. And when it gets below sub-zero, then when you have the exhaustion dots, it's going to give you a setup. And if that setup loses, you can take one setup in the opposite direction. But usually, I mean, it's a pretty high percentage winner because what that does is it puts you in front of moves before they happen. And it's pretty dependable. And that's why we don't talk much about Sub-Zero. Sub-Zero comes with Spotlight Master Suite, actually. I imagine I'll put some time and attention towards it because it's really good. It's just I've got just far too many. It's hard to keep track of everything. But here's a good example of Sub-Zero where the normal Spotlight doesn't give you a trade, but if you're using the Sub-Zero principle, when the green line gets below minus 20, you got your exhaustion dots. You have your winning trade basically right there. So there's a lot you can do with Spotlight Master Suite, obviously, which is why we call it Spotlight Master Suite. And there's various levels. And there's a lot more. There's a lot more I haven't even told you about that it can do. So you can see the Dowie Mini, though, is kind of flaky, but it looks like now it's making lower highs, and maybe, let's see if it'll push to new lows. Usually when you get your fourth reversal in a row, the odds go up. So you have a reversal that was filtered out, you have this one that didn't trigger in, this one didn't trigger in, this one here is like a fifth one. It's going to have to break through the 200 moving average, which seems to be pretty strong support over the last 15 or 20 minutes or so, but the odds are going up that a short trade is going to win. Now that I said that, this will probably lose, but still, this is the 5th setup in a row to go short, and that's usually when these short trades start to become very high odds. So this could end up being good here. Again, that's short from slightly below the 200 moving average, say, maybe 444, 34, 444 would be a good place to get short. That's a 4-tick adjustment. So the got short at 448. You want to see it get below that 200 moving average, I think, if you were going to try to chase that trade. It's got good targets, good sized targets. And knowing what we know about the odds going up as you get closer to, well, 4 and 5 shorts in a row like that, that 4th and 5th short, especially, well, the 4th one's really high odds. And the 5th one is high odds too. So we'll see if that happens to go down here, but you can see also that it's pretty tightly range bound. Look at Sub-Zero. This thing keeps going down, 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 down. It's like way below now Sub-Zero. So this is indicating an explosive move could be imminent, but this is reflecting obviously not the strength of trend, but the weakness of trend. And we'll see what happens here. It's starting to lift up, and like I said, the odds are really good. This short trade will win, and it's starting to win, and there it is, winning. There, see? That's how that works. So that one was good for 32 points to target 1. 49 points coming up if it get to target 2. The stop's already moved down. And we'll continue moving down. You could basically create a trade plan for yourself where you take trades of opportunity like this. Okay, so here, now the stop moves to 41. So the trade of opportunity would be that, first of all, you can wait for a market that breaks out and fails to follow through, right? It made new highs here, new swing highs, and no follow through. And then short trades tend to be good, and the next short trade was really good. It's just that using the filter, you would have missed it, or you would have, if you're using the filter, then obviously you stay flat, but it would have been a winner. Then it comes up and fails to go through again, and then you have a couple short trades that don't trigger in, and what I was going to say is wait for the 4th short in a row, the 4th short setup, and those are the ones you start looking for. That's when you start placing trades. And a couple of these set up that didn't trigger in at all, but the one that did trigger in was the 5th short, and that's the one that was a pretty strong winner. Didn't quite get to target 2, but it made a nice 32-point target 1, and then stopped out up here. But you can do a trade plan of opportunity where you look for those 2 situations, and they happen all the time. So instead of a trade plan where you're starting at a set time, like we typically do in here in this trade room, which is really good for a trade room because it's structured and we can be predictable. You can't really be predictable when you're looking for trades of opportunity. They happen when they happen, right? So you have to understand there's different styles of trade planning, and there's certain trade plans that I need to do because then I can easily teach them and they can be duplicated by others, and I can do them in the trade room. But that doesn't mean you can't be a trader where you look for certain price patterns and you focus on that instead of time of day, or instead of one particular market. You could maybe look at 4 to 6 markets as long as you could pay attention and have good attention span. Obviously, if you're going to use a trade of opportunity as a style of trading, then you have to be really good at your staying focused on your charts. Because what usually happens with that style of trading is that as soon as you turn your attention away, maybe you have to use the restroom or get a cup of coffee or answer an email or who knows what, that's when the trade happens and you miss it. I mean, that could happen with our structured time of day trading also. But at least if it's a time of day trade, you know when you need to focus. So, trading is obviously a discipline no matter how you look at it. But some of you might actually thrive on a trade of opportunity approach to trading. It's harder to teach. It's harder to duplicate. It's maybe not the best method for a trade room, but it certainly could be very profitable because you focus on just those particular patterns. The odds of winning on those patterns are just much higher. So, all right, so let's take a peek here. I was talking about this short trade on the soybeans and then a long, but the stop was way up here. Of course, you put the 2-tick adjustment, and so it stays short, and it comes down and hits target 1 for 13 ticks. That's 3 1/4 points. Perfect. Counterpunch trader, of course, and then that's it. You have to trail down because the strategy thinks it got long here, but we know it didn't. So I was 1 and done. We didn't look at the pound Aussie today. So the pound Aussie, well, I could already tell you that it's flat. It hasn't had a setup yet, unless you're trading off the blue line. I don't remember if that's part of the strategy or not. Again, it's optional. You could turn that proximity trade on where when the exhaustion dots are really close to the blue line, you get your setup, and of course you could always just draw it. Whoops. The wrong button. Just draw it like so. Either draw the trade or you can turn it on, but this would have been obviously a winner. Just got to its target. Let's see, 89. Yeah, got to 89. So if you're using the blue trade, that was a good winner there off of the Aussie, pound Aussie. Let's see, a few questions. Blue and pink picket fence I got on the YM. What about basically doubling the momentum 1.5 if you have it at 0.08? Michael, are you referring, when you say that, I don't know if you're referring to a momentum bar or I don't know what you're referring to. Doubling the momentum. Well, I mean, I've got I've got a 14 here. So you're saying, what about going to 16? Yeah. It wouldn't be 1.6 because the YM trades at $5 a point. It doesn't have ticks. I think that's what you mean. It would be, you're saying if it's, first of all, 8 is way too fast. We used to be at 12, and 12 was way too fast. And then John's saying that the SMA, which is the blue trade I was referring to, is not part of the trade plan for the trade room, but he uses it. Yeah, it's an optional trade, but that's probably why I didn't have it turned on. Michael Embry, maybe you could elaborate a little more. Were you referring to momentum bars? Then 28. Still not following you. The YM here at 14 has been really good. So, I mean, can you try a larger range? You can. But how's that going to hold up over time? Like right now, when markets are really volatile, a larger range bar could be really good. But it would be hard to test how it did over the last 100 sessions, right? Because the range is not always good enough for a large bar. Like you'll just sit there and look at paint dry. The 14 seems to be well balanced in that it tends just to work really well. But I mean, it could be really fast at times for sure. So there are times of the year when the YM is a little bit of a schizo and doesn't do quite so well as other times of year. And don't quote me on this, but just based on a trade room and watching the YM for I don't know how many years, 18 years, however many, I forgot. I'm old. This early part of the year, like the first quarter of the year, is probably the time of year when the YM underperforms. So like there's a time of year when the YM is like, you get frustrated from it, and then right when you're ready to throw in the towel and give up on it, then it gets on fire and does well for the rest of the year. So I've just noticed that, right? And I'm not basing that on any statistical information or anything. That's just anecdotal. Just watching it for so long. Like here we are at the end of January, and I mean, you have trading opportunities in here, but you could also see that it's a very difficult market to trade. And depending on the trade plan and what have you. So that's why I haven't like ever totally given up on the YM. In the past, I've replaced the YM because I've lived through just that time of year where it's just kind of crappy. And we could, now that I've kind of put that out there, maybe we could pay attention and see over time if what I'm saying is how that holds up this year. I don't know. I mean, every year is different, of course, but I've just seemed to think that early in the year is when the YM underperforms. But don't quote me on it. Formatting question. Opening catapult workbench. 9 charts open up. I go to customizing style, weight of dots. Is there a way to change the weight of the dots on all 9 charts without manually going through and setting new defaults? Well, what you could, yeah, John, I don't know if that's true with the RTY, but maybe it is. Johnny, there's a few ways. First of all, what sucks about TradeStation 10 is it doesn't read the same style that I have on TradeStation 9.5. So when I give you guys a template of 9.5 and then you put it into 10 and open it, you get these big, huge dots, right? And that's what you're probably referring to. And I've talked to TradeStation about it, and they just kind of shrug their shoulders. So that's what they think about that. But anyway, there's a few things you can do, but I don't know if any of them are going to help you because each one of your charts has custom inputs. So like you can change the formatting on one chart and then you could hit default and save that as a default. And then when you open up a new chart, those settings will be saved, theoretically. But if you're changing the input on your calculator to a bunch of different, settings, then you have to go in and change all those, right? Which I've already done for you on the template. So I don't know if that really helps you. It kind of bites your nose to spite your face. The other thing you can do, and again, it's not going to really help you, is you can change the formatting on one chart, you can copy the chart and then paste the chart. And then now you've duplicated the same chart with the right formatting. The only problem is now you got to go ahead and put in all the calculator inputs again so that they match the trade plan. So unfortunately, no, I would save it as a default. I think that's a good idea, but once you go ahead and change them, then make sure you save your workspace. Save it as a default for new charts you might open up. Yeah, but you're going to have to change them on each one for at least once and then save it. I don't know what the workaround is other than that, unfortunately. I won't be looking at this for too long here. All right, well, crude oil's mini session is about to start at 10 a.m. We could definitely make sure we pay attention if anyone's trading for that. If you have any other questions, I know I've answered some emails regarding questions over the weekend, and if you're in here in the trade room and you have questions, let me know, because I don't know who you are. I can't see who's in here. Say hello, ask your questions. Happy to answer them. And before I forget, if you guys wouldn't mind hitting the like button, that would be helpful. Okay, heads up on the long. There's a long on crude oil. This is for the 10 a.m. mini session, long at 86.86. There's been a few reversals in a row here, haven't there? There's been a filtered out one. There's been this one. There's been this one. This is the fourth one here. And that's the first trade of the 10 a.m. mini session. So long at 86.86. If you missed it, you can adjust it around the spike, which pushes it up to 89. That's like a 3-tick adjustment. And that's targeting 87.01, 87.10, and the stop is at 86.63. And here's, look, you see how it broke support? Here's support. It broke down with no follow through. Like these are the last sellers. Then you get the fourth reversal trade in the series. Whether it get triggers in or not doesn't matter. So the odds are better on this setup. The odds are higher that this reversal long trade will win. This is exactly the situation I showed you on the Dow Mini, only in reverse. Also, look at the spread on the moving averages. This is what you want to see because it shows that the market's been overextended. It's also very oversold. You can tell by all these blue bars above the zero line. That's why you got the blue trades. And it just hit money management. And it just hit target one. And now this is a winner and a one and done session. The mini session of 10 a.m. just won its first trade and will be power of quitting finished. But it's nice to see when these patterns happen in real time because you start to train yourself and get used to them and you start to believe in them more. The fourth reversal in Spotlight, the odds are very good, especially if you've got some sort of a bottoming pattern. Sometimes it'll make a new low and come down and make a higher low, and then you get this 1, 2, 3 bottom, and those are good too. This time it actually broke lower, but no follow through. So it broke through support, spiked down, and that was it. Whoever got short in here, they're not happy. And set up what you would call a short squeeze. But the fourth reversal in a row combined with the breaking of support without follow through is a very high odds trade. You can take those all the time and you're going to win a vast majority of them. And it just hit a perfect target too, and continuing higher. So if you take nothing away from this trade session other than that trading lesson alone, that could be very valuable for you, like from now to the rest of your life. Are you talking? Yes. You're coming through on YouTube.
Oh, okay.
Fourth reversal in a row in Spotlight. That sounds like part of the art of trading. Where do we find these nuggets documented? Well, I'm sure I've talked about them in the training somewhere, John. It's been a long time, but I always talk about it in here. I'm sure I've talked about it in boot camps too, so I don't remember exactly. It might be documented, I just don't remember. Most of the trade planning, like I said earlier, maybe you weren't in here a little while ago, but usually the trade planning that I do, it has to be something that can be duplicated by others. I could teach it, you could learn it, and also it's conducive for a trade room. So the trade planning has been focused around time of day, start time, stop time, power of quitting, staying in sequence. It's a style of trading that's very structured. You could test it, you can prove it, you can own it, you can learn how to trade it, etc. So that's been the style that I typically teach, right? This one is the 10 a.m. mini session. We know it starts at 10 a.m. We know our goals are target 1, power of quitting, 3 trades max, or 2 losses. I forget whatever it says on the member side. I don't remember. But anyway, very structured. But while we're in here and I'm noticing things, I'm also now giving you another more advanced style of trading, and that is that you can become a trader who looks for trades of opportunity. And so I'm just pointing out some things that we've learned, that I've learned over the years, that certain patterns give you very high odds of success. So if your odds of success are very high, you might want to incorporate that into your routine. Of course, I also talked about how it requires attention span, how it requires paying attention, because you could easily turn your head and miss the trade if you're not paying attention, etc., etc. So it's like it's more difficult to teach a style of trading that relies on a trade of opportunity versus something that's structured with mechanical rules. It's hard and fast. Yeah, so, but for sure, when you're using Spotlight, that 4th reversal setup has very high odds. And that's when the markets, the reversal setups in the same direction. So, like reversal longs in this case. Like, for example, this is a trade to go long here, but that's not a reversal trade, so I'm not counting that. The market's going down, right? It hits a high point, and now it's going down, and you can see that's a reversal to go short. Okay, it's filtered out, but it's still a reversal setup. 1. Here's another one. 2, even though it's yellow. It's not really the same reversal trade because it's really a continuation trade from the move that's already going down. So when I look at the reversal trades, I'm really focusing on when the market's oversold or overbought with the blue spikes, right? So here's another one. So the market's going down, right? It was higher here, reversals lower here. Another long trade, goes down again. Another reversal, 3. Here's your 4th one, and that's the one that wins. It's also the one, here's another way you could look at it too. This is just, if we want to think about this even in greater depth. Count your legs going down, your action, reaction, subsequent action. This is more art to trading because usually you have an action move and then you have a reaction, and the reaction could be 1 bar, it could be multiple bars. In this case, it's a lot of bars. It's all the way to here. It's all these bars as part of the reaction into the 200 moving average. Then you have another leg down, right? So you have 1 leg down, and that second leg down is usually the strongest. So yeah, action, reaction, subsequent action. The subsequent action will tend to mirror the first action, but if it's the second one, it can overshoot and actually be larger. Then you have a 3rd action down, right? And it doesn't go as far. It breaks support, no follow through. Where's your 4th action? You don't really have a 4th action down. But the 3rd action, the second action's strong, the 3rd action's very weak. Because here's your reaction, this little consolidation that follows this action move down. Break support, no follow through, combined with the 4th reversal setup. I mean, the odds are just all shining on you. The trading gods are throwing you a lob ball. They're giving you a gift. But you could look for those sorts of things. A weakened leg in the trend that breaks support and resistance and fails with no follow through. And then if you have a 4th reversal, you kind of have a lot of things stacking up in your favor. Those are going to be very high odds trades. Michael with a good suggestion there. Good morning to you, Pamela. But I mean, that's kind of why we do the trade room also, John, is so that I can just talk to you. This is not the first time I've shown this situation. I know I've talked about it many, many times over the years. I just, it all blends together for me now. I've been doing this for way too long. Another thing that's really great to think about is when you get a spike into resistance, and the 200 moving average I think qualifies for support and resistance, and you have a bar that looks like this. So you have a tail that stabs up and then gets rejected down and closed down with a smaller body. So a bigger tail, smaller body closing down. That is a very bearish bar. Just FYI. Here's another case. Remember, into resistance. Well, the 200 moving average is resistance, but so is a swing level. So like right here, it spikes up and makes a new high, but again, no follow through, right? And notice that you have a tail that comes up and is rejected down and then closes lower, and you have the longer spike and smaller body. And that is on the third exhausted dot. Yeah. That's even more corroboration. That's a very bearish bar. So you could learn how to focus on that situation and do very well. The bar spikes up through resistance, closes down, smaller body, larger wick, very bearish. And opposite is true with support and bullish bars. And I'm actually developing a strategy that's going to take advantage of those situations, but I can't really speak on it now because it's just not ready. But that's the concept, that you can learn that already and just start using that idea. Yeah, so John corroborating, John Lizard corroborating what I said, John Ford. I think it was in the initial training too, but I mean, this is an old strategy. Spotlight used to be new. It's not new anymore. The strategy's quite old. And we don't talk about Spotlight much as a swing trader strategy. Usually I would defer to Counterpunch Trader. But I did have a member ask me about it the other day, and I just opened up the SPY just for the fun of it. And I just took a standard trade plan. I copied unleaded gas, and then I just pasted a new chart and changed it to a daily chart for SPY. And I think, do I have it here? These are all Forex stuff, but I may have, I probably didn't save it. Let me show you something, because the Spotlight's actually an excellent swing trader option. Again, I've just done way more than is possible to follow everything too much for one person. But let's just, any one of these strategies you can do really well. It's just a matter of how well you learn the strategy. All these strategies are good. It's just, they're not, everyone's different. So we all have different styles and different needs and wants and stuff. So it's whatever strategy you're learning, you just want to become a student of the strategy and really learn it well. The strategies exist beyond the dots on the chart. Like if you took off the dots, you should still be able to do the strategy. So that's how good I would love for you guys to get with your strategy, where you don't even need the dots. That's when you know you've really learned it. So let me show you this. This is SPY, and all I did was change the symbol. I copied the unleaded gas chart, put on a daily chart, and didn't change anything, even though this is a $480, $450 stock. It's not a $4.20 tick futures contract. This is an end of day. Every trade is one, every bar is a day, but just go backwards. There's your, when the market started selling off, Spotlight called it perfectly. Today it's stopping out on this trailer. That would have made for a beautiful short, right? Okay, this one lost. It's okay. What did it do? It broke out to new highs, failed to follow through, gave you a reversal. Was it the fourth reversal? No, it was the third reversal, not the fourth. And that one won. If you wanted the fourth reversal, you could have turned on add-on trade, or you could have just used what you know. Here you have sub-zero. You could use these dots, and you could have easily just made this the fourth reversal. Right there. Again, it's about knowing the strategy. And that one would have won too, obviously. It had a perfect target 3. So that if you were uncomfortable with this trade, the next one would have been good too. But the thing is that when you break out to major resistance, and this made all new, whoops. I need to do that. This made all new record highs, right? It broke out to new historic highs when it broke this level up in here. And it failed to follow through. I mean, what I see is a head and shoulders pattern. Left shoulder, head, right in there, right? Head, right shoulder. Broke the neckline, and just watch out below. But Spotlight called the trade even prior to that right shoulder forming and dropping. But look at this trade here was a no trade, depending on where you put your entry, but that clearly didn't trigger in. And then this long trade was a nice winner. So you got 1, 2, how about over here? Look at, there's another winner. You keep going back, there's another winner. There's another winner. Like all I did was copy and paste, putting on a chart. No trade, no trade, no trade, no trade. Winner. So we just randomly looked at a whole year's worth of trading, because this is February. Let's go back to one more and see. Here we're in January. Still no trade, still no trade. That would have been adjusted off the key level, but that's already in December. So we looked at a whole year's of worth of trading, and there's only been one losing trade. Just a random look at Spotlight on a random symbol with a copy paste from another trade plan. Like I said, we don't talk about the swing trader prowess of Spotlight very much. But when I saw this, because I was answering the question from a member, got me thinking. Spotlight is a pretty amazing strategy. I actually think it's my best strategy, even better than Catapult. For me, personally, that's what I think. But it's nuanced. You have to understand it. You have to understand how and why it works. If you do, then you can really use it. You could do some damage in the markets for sure. Johnny with a question about organizing my TS workspace. My workspace names are becoming a jumbled mess. If I need to regroup and go back to the basics, which workspaces are most important? Well, what I think you should do is, if you're going to use a workspace naming convention that begins with the name of the strategy, and then I usually go, like for this one, this is called Spotlight 1. Because that's what it started as. It's become more than that. But like if you're doing, is it Catapult? You can either start with the name of the strategy. Yeah, that's what I would do. So if are you doing like Catapult RTY or just you got to think of a hierarchy. So you can go from the name of the strategy to the name of the symbol to whether it's a day trade or a swing trade. So I always divide mine by, if it's a trade plan, I'll put TP at the end of it, or TP with a little s. If it's something I'm like working and experimenting, I always call it a workbench. You just need to come up with a simple method so that all your workspaces are named the same way and that you know what they are and understand it. And then make desktops to put them on. So you could go new desktop, Put the workspaces on that. Name the desktop that corresponds with the workspaces that are on that desktop. Like that. That might be a good way to stay organized. Michael, I would think you keep the charts you are currently trading, and then if you want to trade something else and open a new chart, just a thought too. Yeah, you don't want to open up too many charts either, because you'll also use up bandwidth and resources. TradeStation is an old program. It's only 32-bit. It's not 64-bit. At some point, you reach a limit. You open up one chart too many, and TradeStation crashes. So I agree with Michael on that. It's good advice. Toby, I'm freaking out on how good the CPX2 is performing, the SST on steroids. Yeah, the SST. That's interesting. Seven Summits Trader. You're going way back, Toby. And believe, you know what? Seven Summits Trader is probably the one on steroids. I've looked at it off and on over the years, and it's still amazing. That's my very first strategy of all time. It's kind of like the lost strategy. You have to kind of go become an archaeologist and find it as a fossil somewhere. But it still works great. And then Spotlight, I think, is even better than Counterpunch in some ways. Like I just showed you a random chart of the SPY. Let's do this. Let's now that we saw Spotlight. Spotlight gives you fewer trades. That's the thing. There's much fewer trades with Spotlight for swing trading. We only saw a handful of trades for the whole year, right? Maybe 6 to 8 trades a year per symbol. But look at the odds. There's only one losing trade, and I think that's what you find a lot of when you're using Spotlight as a swing trader, just for example. So now, let's do something. I'm not going to change inputs or anything. I'm just going to take a basic plan like crude oil, copy it, paste it, and then we'll change this symbol to the SPY on a daily chart, and we'll look how the difference is between what Spotlight just showed us and what Counterpunch. And Counterpunch or CPX2, it's basically going to be the same thing, right? Because we don't really care about the nuances with a big swing trade. Like, we don't care about key level adjustments, really. And this is a day trade chart being put on a swing trade chart. A day trade from crude oil being put on the SPY, end of day, right? So you could see right away a lot more trades. Look at all the trades where we only saw 2 or 3 trades in the same window of time. With Counterpunch, we see a lot more, and I have the add-ons turned on. So if we turn the add-ons off, maybe we should, just to compare apples to apples, because I didn't have them on with Spotlight either. Even if I did, there'd still be fewer trades. And by the way, that was Spotlight Gold. I think it was just gold. I didn't have any of the diamond level setups. If we turn the diamond level setups on with Spotlight, you're going to get a lot more trades for sure. Are they good? Are they bad? I mean, you have to test it and see. So, winner, that's the same trade as the Spotlight trade. But you have, what Counterpunch is prone to do is get caught up in the chop sometimes. I mean, any strategy really will do that. And remember, we have a 2-cent breakout on a $400 chart. That's probably not appropriate. Maybe you want to have a $2 breakout. But even so, as I'm looking at this, it wouldn't save you on these trades, because basically you have loser, 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 loser. 4 losers, 5 losers in a row. You didn't have any on Spotlight. You had one. But Counterpunch still gives you some nice trades, and this chart can certainly be made better. You certainly have a lot of winners too. Some of the trades are the same. There's definitely a lot of winners. But you could turn off some trades. You don't need to use all 3 colors. And you could also put on trend mode. And trend mode could help you. So there are ways to use Counterpunch to make it better, but it's harder. See, Spotlight was actually designed, it evolved out of Counterpunch. It borrows the exhausting dots, it borrows what was a signal line called the balance line in Spotlight, but then it uses other things to be pickier with its trade setups. The oversold, overbought, the green line, as I explained, the proximity of the exhaustion to the various moving averages, the 50 moving average being the main one. It just made for a higher percentage winning strategy, and it doesn't take all the trades. And so you could see where Counterpunch had 5 losses in a row, and here Spotlight did a really good job of avoiding 4 of the 5 losses, only gave you the 1 loss. So it's a good comparison. It's the same setup to go short too, but for different reasons. This is the white trade due to the Counterpunch rules. This is a pink trade due to the Spotlight rules. It just coincidentally happens to be the same setup. So you can't go wrong with either one, really. I mean, I definitely love to trade Counterpunch as a swing trade strategy, but Spotlight's also really, really good. It's just you get fewer trades. So that's something to be aware of. Toby, I'm day trading on CPX2 on CL, and it's a freaking ATM. I love that. Well, that's a good thing when your computer's going ching-a-ling-ding. JP Morgan, TradeStation has told me that the matrix uses the most processing power, so to minimize having multiple matrices open. Yeah, that's true. So that's why I use, I don't have my matrix open right now because I'm on my portable. And I've tried trading when doing the trade room on my laptop, and the latency is just, it's a foolish pursuit because I have to click and then wait for something to happen, and there's no way to trade like that. But so I close my matrix because it does use up resources. But what I use is I use a radar screen. So I use a radar screen, and I make a small window that has all the symbols I like to trade, and then I connect them to 3 matrices. And so I have my 3 matrices and my radar screen, and the radar screen's got all the symbols, and they're all connected. So if I click on a symbol on the radar screen, it instantly changes the data on the 3 matrices to match. And that's how I avoid opening up a lot of matrices. Having 3 open is no big deal. One of them is a stop limit order, and that's what I use to place my trades because then I avoid slippage getting into the trade. Then right behind it I have a stop market order, and I'll toggle to that one if I have to do a stop and reverse. With a stop and reverse, you really have to go in with a stop market, because if you go in with a stop limit, you'll get filled on the exit of the first trade, but you often will not get filled on the entry on the next trade. I don't know why. It's not always the case, but sometimes. Those are the ones that win. You know, the reversing trade is, if you miss it, then you totally screw yourself up. The problem is when you use the market order, you're going to pay slippage on it. So that's stop and reversals are not ideal, but there's nothing we can really do to prevent them. And if you're going to reverse, you're going to reverse. You just pay the slippage, unfortunately. And then the final matrix is just for single market orders, so that I could just toggle in and out of positions if I have to. Like if I have several positions on a trade and I want to scale out, I could mark it out of 1 or whatever. Or if I lose my handle on my trade, I could use a single market order matrix to manage the trade until it's finished. You just have to be sure that you don't leave any stray orders out there by accident, so you have to be sure that you check that you've canceled all your orders. Because once you start using a single market order matrix, it's not attached with an OCO, then you could accidentally leave an open order that you're not aware of, that you forgot about. So that's super important that you double check that when you're trading. But like this, you can use your matrices any way you want. I mean, not any way you want, but you could use it and practice with it in a way that you could trade with it, basically, with as many symbols as you wish. Of course, I would not encourage you to trade a lot of symbols when you're day trading. But if you're looking for trades of opportunity, and you've got a chart with 6 really great trading stocks, or not stocks, but charts of some sort, and you see the fake, the breakout that doesn't follow through, and it's a leg that's late in the trend where you had strong legs, and now you have a weak action move leg that barely breaks out of support or resistance, doesn't follow through, then you get a reversal set up, and the odds are high on that, and you want to place that trade, but your matrix is set to crude oil, you just saw it on the Russell, you can click on your radar screen on the Russell, and then it'll instantly change all your matrices to the Russell also, and then you can place that trade on the same matrices basically. So I have a video on that on YouTube. I know I'm talking to you quickly and explaining to you without having it open so you can visualize it, but I already did a video on it on YouTube, and I think it's How I Like to Trade or something like that. It's one of the early videos. So if you go on my YouTube channel and if you look at one of the first handful of videos that I did, you'll find that video and you can see how I use the matrix. And I think it's very helpful. And then you want to use your sim account to practice and get really good at placing trades and using that setup the way I described. Don't place real live trades until you've practiced and you know how to cancel trades, replace trades, move your handles, cancel them, replace them. Just, you want to practice every single possible scenario you can think of over and over again. So you open up your sim account, you just start practicing placing trades. You don't care if you win or if you lose, and none of that matters. What matters is that you can execute your trades properly, all kinds, in all situations. So I know that I kind of went down a pathway here to give you guys a mini course, but since you mentioned matrix and processing power, it just kind of led to that. So there you go. Anyway, my voice, some of you know I've been nursing this thing with my throat now for quite some time. Maybe 18 years in the trade room has taken its toll on me physically, but my voice definitely is something I've been having to be careful with, and it's starting to get a bit strained. I've been with you for about an hour or so. Let me just see if there are any more questions, and if not, we'll say goodbye. I'll be here on Wednesday. John, I think you're here Tuesday and Thursday, right? I can't remember if you said there was a day or two that you cannot. I know you're going to be traveling. I think you said that. I just don't remember when it is. I don't have it in front of me. But yeah, let us know if this is a normal week. I'll definitely be here on Wednesday. Again, please don't forget to hit the like button. That helps. And other than that, I'll just wait and see what John says, but I'm going to say goodbye to you guys. You're welcome, Johnny. You're welcome, John. Well, actually, come to think of it, I saw all the trade rooms scheduled. I believe John will be here tomorrow. I'm just going to say he is. I'm going to stick to this story. All right, guys, everyone have a wonderful day. Okay, but not Thursday. So no session Thursday, definitely tomorrow. All right, great. Thanks for clarifying, John. Everyone have a wonderful day. I'll see you on Wednesday.